good leader. Help us, we are weak, because you're strong. Thank you to do so. In Jesus' name. Amen.
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 Pastor in
Man,
the
that
house.
is amazing. Can you imagine
Amen.
where you are in a club where everything is in it?
Mm,
Okay?
yeah.
So wake your people up. I know it's cold. Some people are getting into the blanket. Tell them to wake up. There's no perfect moment. That's why I was listening to that speaker this morning.
And
There's
Dr.
no
Ruth,
perfect
this
moment.
morning, not to cut you, I'm so sorry, dear. We also have NLA today. Oh my God, how are we going to do that?
NLA, where?
Yes, today.
Okay, so that was about what I need to say.
Thank you.
So the book club is just open to the public.
Okay,
We're not representing any organization, any group. We're just here to read.
okay.
Okay. I will encourage you to try as much as possible. It's not mandatory you have to read, but we encourage you. Okay. So if you have other things, that is why these days we go live on YouTube. For any reason you miss a section, you have the opportunity to come back and watch it.
Oh,
Listen to it on your
thank you.
YouTube while you're driving to work or cooking in the kitchen or doing something, okay?
Thank you. Thank you.
So I'll also share the link to the YouTube so you can share with anyone who, for any reason, they couldn't join on Zoom. The only thing when people on YouTube, they don't even tell us if they are participating or not, but we do share it, okay? So welcome everyone. Welcome to another Saturday of reading. This is where we are. What do? We read. We read other people's mind. We go through their concept. We go through their time. What has happened? Okay, and we apply it to our own lives. We pick up those things that is relevant to us. The things that are not relevant, we toss it aside. But it's only you that have to choose what is relevant to you. It's only you, not me. Okay. So that being said, this is a book club, it's a social club. Everybody that have access to this Zoom link, it doesn't matter who you are. As long as you love to read, you're welcome to read. We are here by virtue of our own accord. We are not representing any organization, any individual, but we're representing ourselves, our families, and whatever we represent according to our own belief system. So when you're going to speak, when you're going to ask questions, when you're going to add, try as much as you can not to call any organization name, any individual name. You can say company A, company B, company C to add or remove whatever you want to contribute. But remember, anything you contributed is public. And of course, middle class like to hide certain things. Now we are open data. One of my colleagues said, Dr. Ruth, that she's open data. We are open data. All right? Maybe that would reduce our stress. All right, Miss Christie, I see your hand is up. California, imagine this is man discipline. California is awake by this time. What can you do? What do you say? All right, Miss Christie, go ahead.
Ready? Yeah, no, my hand raised by mistake. Good morning, Dr.
Oh, okay.
California is here too. Good morning.
Yes,
Good morning.
we
Good
want to
morning. Good
learn.
morning.
Yeah.
All right, we are starting from page 51. Page 51. Get me right if I'm right.
Yeah,
Page 51.
Dr. Ruth, you said that we're going to use the first 10 minutes of today for a lady to talk about the mortgage
Oh,
stuff.
yeah. I hope she's here. Let me see. Let me see. I hope she's here. What is her name again? No, I have a number. Give me a second. What day did we even have that meeting? What day was
Our last meeting was the 10th of January.
Okay, thank you. Thank you, my sister. That's why I love my fellow students who their mind are open. Hey, let me see. I think I find it. Okay, Manessa. Manessa, are you here?
Maisa?
Yeah.
Yes, ma'am, I'm here. I can't.
Manessa, can you put your hand up so I can unmute you? Let me see if you are able to speak where you are. I can see you. Let me see. Okay. Okay. Can you unmute? Are you able to speak where you are?
Yes, I'm able to unmute. I just can't come on camera right now.
Okay. You're owing me 2 million, and this is public, you know that.
Yes,
For
ma'am.
not coming. So we said that we're going to listen to you this morning because we are running late last time, to tell us just for a few seconds a little bit about this mortgage.
Yes, ma'am.
So are you willing to share?
I am.
Try as much as you can to be discreet.
Okay.
Not to call company's name, stuff like that. But go ahead.
Absolutely. Let me move away because the kids are all, and I know this is recorded. Okay.
The kids can speak too. All right.
Talking about last time was about using your mortgage. You can use the entire mortgage, or you can use just what you're saving for your taxes, property taxes. And that's
Right.
how. And so what I did is I took the money out, or I took our mortgage out of escrow. This is very important because the book we're reading, Becoming Your Own Banker, is teaching us that we don't need to finance through other companies. We can be our own financer. So I said, this was before I read the book. When I started hearing this concept, I said, let me just try with the property tax first. So I took the mortgage out of escrow. That saved me $1,000.
Oh, stop right there. What is escrow for someone who is listening?
Okay, so when you finance your home, you're going to need somebody to pay the taxes, or a group of company that's going to pay the taxes. And we typically go through a bank to do that. So the bank is now going to charge you a fee to bundle your mortgage, which is the price of your home monthly that you're paying, with your taxes. And sometimes you can even bundle your insurance with it as well. So what we don't realize is that we're thinking that that mortgage that we're paying is actually the value of the home. But actually, you're paying a fee to go ahead, and we're used to paying fees, but you're actually paying a cost for that. So when an older gentleman, very old, older gentleman that I knew, he one time said to me, just kind of casually, oh yeah, I just go downtown and pay my taxes. I don't have it in escrow. I said, well, what? Why is he doing that? I didn't think much of it until we started, looking into finances. So anyway, took it out of escrow, took it from the bank. Okay, so we're taking it out of the bank. And now we are the ones that are going to go down to downtown. Oh, it's very simple. It's very simple. You're just going to go to downtown at the end of the year. You receive your tax bill. You go and you pay it there. But remember, we're trying to become our own banker. So now the money that you would have been paying, yes, ma'am.
No, go ahead.
The money would have been paying into the bank. You're not pocketing that money. You're putting it into a policy. Okay? In our case, we used an IUL. You're putting that money into a policy every month. So once we took it out of escrow, we saw that the actual cost of the mortgage for the home was only $866 versus the $1,866 that we were supposed to be paying every month. The reason why I even thought to take it out of escrow is because every year the cost was going up, and I'm trying to figure out how the cost is going up. But anyway, took it out. Now you pay the mortgage, $866, that's the value for the home every month. And now you have $1,000, right? That does not go into your pocket. That's going to go into the IUL. You put that money, this is the discipline part. You have to be disciplined not to say, oh, now I have, all this money. No, we put it in every month. So as we're putting it in every month, only once a year you have to pay your property tax. So then we'll go there. Mind you, let me step back a little bit. I have capital already in my IUL, meaning I already have some cash value there, because unless you have done something like done a 7-pay, or maybe you've paid up, you don't have any cash value yet in your policy. So you have to wait until you have cash value in your policy, so that when it's time to pay the property tax, now you have your cash value that you take out. So I take it out, and guess what? My money is still building compound interest. So that is the long and the short of it. It's important that, last thing, important, like Dr. Ruth told us last week, loan provision is very important. You need to get to a place where it's kind of like a wash loan. So as you're taking it out, you're getting credited when you put the money back in. And in my case, when I take the money out, anytime I put the money back in, I'm credited 2%. So even though the loan is 2%, because I put it back in, I'm credited at 2%.
Wow. Guys, look at that. Middle class are taking absolute control of their own word. My people, there's something that she said that I want you to take note of. You have to be disciplined. You're not going to go take that money and say it's time to buy the new Louis Vuitton bag. You're not going to take that money and say it's time to buy a new car. So now you have 1,002. It's like penny wise, pound foolish. You got to be disciplined. That is the essence. Okay, you got to be disciplined. Thank you so much, Manessa, for sharing with us. We don't take you for granted. Okay, Professor Nick, go ahead. Professor Nick, you're muted.
Okay, thank you so much. I can't see the name of the speaker, but this is divine, because I just got my tax bill, and usually the bank bundle everything up, but everything is going up. And I was thinking, what am I going to do to do this? So question, did you call the bank to tell them you're pulling it out of escrow? Or do you just do it and assume they will know? And what about the insurance? Because my insurance keeps going up too.
Okay, so yes, I did call the bank to take it out of escrow. We actually had some money in there, so they were actually sent me a check. Imagine that. So that was kind of where we were able to start off with there. And what was your second question?
Whether you also did the same for the insurance?
Yes, ma'am. I did the same for the insurance. So I went and looked for another insurance company to also be able to get that lowered as well. Yes.
Wow, thank you so much. This is timely.
You're welcome.
Wow. Wow. Can you all see anyone who missed this money? Right? You miss out on this. Guys, this is what people pay thousands of dollars just to go listen, especially January. They are trying to help you put in the vision board. How many of you have seen this perfect vision board that never acts? It never exists. All right. Sir, go ahead. Let me unmute you. I hate to mute people during book club, but people were making noise. Go ahead. Go ahead and unmute yourself, sir.
Yes, sorry. Yes, thank you. I forget her name again.
Vanessa.
Yeah, Vanessa. You have to call the bank. I know some of us, we don't have background in the financial. All this is new. We are learning. Thank you. So that bank can be that mortgage. Someone manage a mortgage. That's correct.
I believe, if I may add to what she said, I believe that anyone whoever that's financing your mortgage, whoever that's in charge that's financing your mortgage, okay, Except now that she said, I've never ever paid attention to that escrow. I was thinking they're doing me one beautiful thing. Okay, but whoever that is financing your stuff is the person that you call to say,
Okay.
take me out of escrow, take me. But remember what she said. And we have said before, depending on the type of life insurance portfolio you have, becoming your own banker requires, remember what the book said, give it at least up to 7 years, right? 7 years and above. Because life insurance is not an investment. It's a protection that requires time to build and marinate. It's going to give it time to, to build that resources for her. She have had it. Luckily now she have the knowledge. She's going back to efficiently use that tool. But for most of us who just started 2, 3, 4 years ago, if you're not super funding your policies, you're going to wait.
Yes.
Okay? You're going to wait for that 7 years, 10 years. I have a policy now. That's why when I watch those people that go to social media and they tell them that life insurance is a scam, especially those of them that have cash value of life insurance, and they will cancel it to go do time. I just pity them and say, how wish you know the level of ignorance that you have. Because now I'm privileged. I've had one that's more than 10 years. Now I have built, let me call it equity inside that policy. Now I can play around with that. But you that have 1 year, 2 may not be able to play around with that. So you're going to be patient.
Yes.
But you still can be disciplined enough. Again, these are recommendations, educational. We're not telling you what to do. We're not your mortgage company. We're just sharing knowledge.
Okay.
You can also take the same action. Maybe take that money, put it, even if it means in your bank or wherever, that is going to compound for you until you start that ability to exercise that right on your policy. But wherever that can put additional money into your pocket, why not? Okay. Vanessa, go ahead.
Thank you.
Somebody, I didn't know if somebody was asking.
Yeah, he asked you. He was asking, what was your question again? He was asking whether it's the bank or if it's another person financing your stuff.
In my case, bank. So I called the particular bank, and it was very easy to go ahead and do that. And they're going to ask you, they're going to say, are you sure? They'll try to offer you some, depending on what bank it is, they might try to offer you some things. But again, like as Dr. Ruth has said, we're now learning how we can finance ourselves. And so we don't need certain things or certain entities when we have the bank ourselves. We have become our own bank.
Yes. So the information you have, the interpretation you have, and the actions you take is what makes you different from another person. That is why there's a popular saying that says, knowledge informs, understanding transforms. It's the understanding that breeds the action. Okay. Thank you. Thank you so much. Ike.
Thank you, everybody. Thank you, Dr. Ruth. The thing that, or one of the things she said that caught my attention is the fact that she was paying 1,800 and something before. Now, the amount she's paying went down to 800, which means the bank was charging her for the services. So they charge all of us, myself included, without our knowledge. So now you can take more control of your life because it's more about taking control, being in charge. And that means a lot. And hopefully we all have to be disciplined to make this work. And so thank you very much for that information. That's very valuable. Thank you.
All right. Okay, thank you so much. Yes, we are paying for fees. There are little fees. There are little things that we pay for that many of us have not even paid attention to. That's what Robert Kiyosaki said. It's not how much you make that matters. And that's what we're trying to bring out here. It's not how much you make that matters, but how much that works for you. A lot of people, as we speak, don't even have some of these portfolios. Why? 1, they don't have the knowledge. 2, they can't come together to read as we are reading. 3, they're watching 2 minutes video. Even right now, simple discussion. Has it not taken us more than 2 minutes? It's taking us more than 15 minutes. How can you make a decision out of 2 minutes? Out of 3 minutes? You're a physician. It took you 10 years, 12 years to go to school, to graduate, to make the so-called money they are paying you. And you go to social media for 2 minutes to make a decision. How do we help middle class to come out of this mediocrity and begin to take control? Thank you, Manessa. God bless you. Miss Ify, go ahead.
Ify or Effie?
Effie, go ahead.
Okay, thank you. My question, thank you, Miss talking Dr. Ruth, first of all, and Melissa, thank you for the information. I'm wondering, when you say go to downtown, do you mean the escrow office?
So you'll go down, you'll have the, how do we call it? It's the tax office, not escrow, because escrow is more so associated with the bank or wherever you got the finance from, but you're going to go down to the tax office downtown and pay your taxes, or wherever, however it means you pay your taxes, but that's how we would do. Just go downtown to the tax office and pay it there.
Thank you. Thank you. Definitely. Downtown is where you pay taxes.
Yes, ma'am.
That's where Uncle Sam's office is. There's one book I read. Let me see if I can find it. They call it 7-Year Future. There's something you say, I like to read it to people. Those people that like to pay off taxes, I don't know how they pay it off, but it says, Benjamin Franklin said, there's nothing certain in this world except for debt and taxes. You make money, they tax you. You spend money, they tax you. You save money, they tax you. You die, they say tax you. Let's give me a second. Hello? Money. Can I call you back? Can I call you back? Yes. Sorry about that. All right. It says, from sales tax to income tax to property tax to estate tax and every other tax, anywhere you turn, the tax collector waits you. So where you go to pay tax is in downtown. By the way, Miss Georgina, I'm going to make you a co-host. Okay? So help us with noise because I want to unmute everybody. Okay. Silas Uche, I'm going to make you a co-host. Okay. And of course, Miss Catherine, can I make you a co-host? Okay. And Dr. Joy, can I make you a co-host right here? So I can mute every other person so I don't keep muting and muting. All right. Give me a second right quick. I see that there are too many hands up. This discussion is getting some all right. Boss Busola, go ahead.
Thank you, Dr. Ruth. So I just wanted to also suggest, because we were talking about taking the money from your own cash value to pay your taxes. So for those that don't have cash value already, because you just started your IUL or something like that, what you can do with the money that you're saving from that escrow right now is, as you're putting some into your IUL, you can save some for the whole year from January to December. And when December comes, it's time for you to pay your property tax. You have money to go maybe downtown or pay it online to pay, and also pay for your insurance, because that's what we do too. As a matter of fact, we just pay our property tax and insurance, and you have the opportunity to also shop around for cheap insurance on your mortgage when you don't have it under your escrow.
Thank you. Thank you so much. Did you all hear that? You have the opportunity when you are in control. When you are in control, so many things becomes easy and you reduce your stress. When you are in control. All right. Okay. Fola.
Yeah, good morning, everyone. So thank you for having this conversation. So my question is, I came in a little bit late. So when I had that escrow, because I know we're on mortgage right here, and the money has been going up every single year. So now I have to draw everyone back a little bit because truly I want to understand it. What are we supposed to do? Go to downtown and pay the taxes upfront?
Okay. So we can go back, Miss Fola.
Okay.
But what I would say when we finish, go back to this video. Is
Okay.
YouTube live.
Okay.
Go back to this video and watch it. But also we're talking about, remember, we are reading the book, Becoming Your Own Banker.
Okay.
So, and we're talking about taking absolute control of the things that we do. And this discussion started in the last book club. And we said to them, Manasseh is going to share with us a little bit about the escrow and the things that we do. And that's where that's what she shared, and that's what the stories are coming up. Okay?
Okay.
All right.
Thank you.
Dr. Benny.
Yes, Dr. Ro. Good morning, everyone. So I think she was saying that people should go to downtown. I think it is the county clerk office. That's where you pay your what is it called? Your property tax payment. So you go to your county clerk office and then just let them know you're there to pay your property tax, and then you can pay it there. So some places have it in their downtown. Usually the downtown of each village or each city. That's where it is. But it is your county clerk's office that you pay the taxes.
Okay. So following what Dr. B is saying, wherever you know, you have to find out where you pay your taxes. Wherever that taxes is, go find it yourself and do it there. Okay. Just ask the question. Some of them you can even do online. Thank God for technology now. Some of them you can actually sit down and do online. Because most of you that have something like trust, if you already set up your trust, you know you have to pay taxes on your trust too. It's a property. So some of those things you can do online. Okay. Miss Kate.
Katia, good morning.
Katia.
Thank you, Dr. Wood, and thank you, Maisha, for bringing this to light. I already started. I did call my mortgage company and I already established it, removed my escrow, send me my money, whatever I had in my escrow account, they're about to mail it for me. So I will go pay my taxes and my insurance and my own. It's good to take charge, guys. It's easy. Don't be afraid. We all can do it. Thank you, Dr.
Wow. Wow. Do you know that before now, each time I hear this escrow account, I keep wondering, what is this thing all about? My people, where will this education start? Where is it going to start? I guess the Robert Kiyosaki says start at home. Okay? Imagine where our children, let me tell you, as we are talking here, my daughter just walked up to me and said, Mommy, why all this discussion when I don't even have insurance? She just walked into my office frowning and I said, what? Say, why all this discussion when I can't even get insurance? I say, yeah, because we're the victim of ignorance. We're suffering it, but we're not going to allow other people to suffer. That's why we're here. Okay? So, my people, take charge. Okay? You will not be silent. All right? iPhone. There's no name. Okay.
Yes. Yes.
Okay.
Good morning.
Okay, go ahead, iPhone.
Yeah, good morning. Sorry about that. That's Steve. So my question, if the lady is still here, is when he said that it was paying 1,800 down to $800 the mortgage. So now the 800, does it include the tax, property tax, insurance?
Okay, good. So what she's saying, Mr. Steve, what she said is that she pays 1,866. Let's use that as a case study. Okay. Now she decided to take her account out of escrow. Out of that, which means she's not responsible to pay her taxes, her property taxes, and her what? Her insurance. So the 1,000 they were taking every month, okay, they're actually taking it to pay your taxes and to pay your your insurance. So which means in a year, she's paying $12,000. If you times it 1,000 times 12, she's paying $12,000 for which they use. That's where they take money to pay for taxes and to pay for insurance, the mortgage insurance. Now she decided to be in charge of paying those things. And when she took it out, that 866 she was paying was dropped down to 866. Okay, that's what she meant by that. Okay, so she's taking over those things now. So she's not paying whatever it costs to pay your mortgage and the interest that comes with it, but the tax, the property tax and insurance, she takes over it. Okay. All
Thank you.
right. All right. After this, hands up. Don't put it by nobody else again. Okay. Let me finish with this one's up. Chas. Chas. Okay. Chas is not there. Joyce. Joyce iPhone.
Yes. Good morning, Dr. Ruth. Good
Good
morning,
morning.
everyone. This also applies to when you have paid off your mortgage. You have to pay your tax by yourself. So you go to downtown, just like everyone has been saying. So once you pay your mortgage off, you are now responsible to pay your tax and insurance.
Okay.
So yeah.
That's a good extension. That's another conversation we're not going to start today, but some people think that when they pay off their mortgage, that life become easier. If you don't have money to pay your taxes, they can sell off your mortgage like that. FYI. Tina.
Yes, good morning, Dr. Ruth, and good morning, everyone. Actually, my question is close to what the last speaker just said. If you have paid off your mortgage and you're now paying the taxes and insurance yourself, is there any way to lower that, to shop around? Because it's no longer now through the escrow. It's like the state is taxing you for the property and for the insurance. How can you lower these costs?
Again, everything we do here is educational. Okay. It depends on
You
depends
can
on
only lower the insurance.
Okay, go ahead. Go ahead, Ms. Joy.
This is Joy again. You can only lower the insurance by shopping around, but the tax is fixed. You can't change that. That's the state.
Okay.
No.
And
I think
hold on.
I think
Hold
it
on.
depends on your age.
Hold on. It depends on your age, and it depends on how many properties you have. If you do have only one property, you can apply what they call home estate or whatever.
Estate.
Homestead.
Homestead.
Yes,
Homestead, yeah.
homestead. You can apply that. Maybe that can help. But for most of you that live in this country that think it's for free, there's no free. The school district, you're paying for it. All of us that have mortgage pay for the school district. For when you're going to that school, they say your child is going to school for free. Now, lie is not true. They're not going to school for free. Me and you paid for it.
That's right.
But we pay for it in the name of taxes. Okay? So you have to shop around and figure out, ask, do your own due diligence. Okay? Again, this discussion is all about taking control. A lot of people for so many years, including me, have not taken control of the money that goes out of our pocket. So that is what this discussion is all about, is what? Taking absolute control of every $1 that goes out. Okay? Once you're in charge, those things matters. But now, think about this. Have you wondered why somebody goes to social media? I'm about social media because is doing damages to middle class. And ask them, somebody comes to you and say, why should I be paying my life insurance? Why should I be paying it until I die or whatever? But do you know you pay your home insurance until you die? Until you die, you pay your home insurance. And you that own the home, you're wondering why you should pay your own life insurance? Or somebody is telling you, buy one that by the time you're 65, 70, we're not saying term policy is bad. That's not what we're saying. But we're trying to get your attention to say, somebody tell you to buy term policy so that by the time you're 75 and 80, you have paid off your school loan, your children have graduated, you don't need a room for insurance. Meanwhile, you're in home insurance. As long as you live on this planet Earth, as long as somebody lives in that home, there's going to be home insurance. So who is cheating who? Think, who is cheating who? Guys, help your community, help your children. Especially our children are the ones that like to watch social media. 2 minutes. Drive through insurance, drive through food, drive through clothes. Everything is drive through. Nobody have patience to listen. And we're here. One of my friends say it's like basket. You take the basket to go get water. The basket, you think any water is coming home? No. Again, I can only control the people under this roof. The rest, on your own roof, you are in charge. But if you don't have the knowledge, guess what? Everyone will eventually at some point pay the price of ignorance. Okay? Ogudibe.
Dr. Wood, can I say something really quick? For those of you who worry about the insurance, there's something that calls insurance score. If you have good credit, every year when you're renewing your homeowner insurance, you can ask them to run your insurance score. You can save about $50 based on that. I do that every year when it comes to renew my homeowner's insurance. You can save even $50 to $70 a month based on that.
All right. Another information. Insurance score. Can you put it in the chat? When you say score, means SCORE.
Yes, yes. Your
Okay.
insurance score, yes.
All right. Ogudipe.
Thank you so much, Dr. Ruth. Good
Thank you.
morning. Good morning, everyone. Please, I want to ask, you mentioned earlier that you have to pay tax on your trust. Can you please talk a little bit more about that?
Another day of discussion, but if you have a trust, check your email, check your mail. They should have sent you something. All right? If you have a trust, they should have sent you something. Or call the person that did your trust, or call your county. The best place is always go to your county.
Okay.
Always go to your county. Call them. If you have a trust, ask them and say, I have this trust, blah, blah, blah. Am I going to pay tax? How does that work? All right?
All right. Thank you so much.
You're welcome. Miss IJ.
Dr. Ruth, can I make a quick correction on something? Somebody said that your property tax is fixed. That's not true. You can always contest your taxes at any time.
That's what
we
protested. Dr. B, that's what we said. That it depends on your age, depends on some variables. And you can use means to contest that. That is correct.
Yeah.
Thank you. Okay. Again, with this conversation are not normal conversation that happens. Because we just sit down, we got it. There was no education. Everybody jump into it. And of course, you need that necessity, right? Shelter. You sign those papers. Do you remember the signing ceremony, right? You do those signing ceremony and you keep going. You didn't know your money is coming out of your pocket. Miss IJ.
Good morning, everyone.
Good morning.
And God bless you all. Thank you, G. Thank everybody for the discussion. Dr. Ruth, thank you so much for this forum. So I just got in when the lady was, Vanessa was talking about putting the escrow the money you got back from the bank to the IUM. So
to any cash value of life insurance.
Any cash value of life insurance. So if you put it there, then at the end, when it's time for you to pay back, so you go back to borrow it or what?
It's up to you how you access your money. But if you're going to be your own banker, the better the option that Ness and Nash is offering us is to do what? Take the loan from yourself. If you take a loan, but you have to consider wash loan, right? If you like my policy now, there's a wash loan. Depending on the type of loan you take, there are different types of loan. We talked about it last time. Depending on the type of loan that you take, will determine how you pay it back. Okay, but you have to look at your loan provision. For most of you, some companies that have loan provision of 8%. You know, those are the things that middle class don't look at. All they look at when they're buying policies or when they're getting their protection portfolios, price is cheap, premium. Premium for me is not a cost. Premium is what you use to service your protection. You should be looking at the loan provision of that company. It doesn't matter how much I pay here. If the loan provision is 8%, I have another company giving me loan provision of 2.75%. Which one will you prefer? Put it in the chat. 8% or 2.75%?
2.75.
Okay, but we don't look at that. All right? Oh, we're looking at premium.
So, Dr. Ruth, since most of us in this forum, maybe I withdraw that, is a licensed professional. So before we sell these policies to people, because they are trusting us, and so we need to really find out the percentage of the company before we sell to them.
It's up to you. Who are you? If you're a licensed professional, then if you're telling me right now you're not doing that, it means that we need to take you back to your state to take additional exam. How about that? So that is what we're here to read. Okay? We're here to read. Professor Nick, you're going to be the last speaker. Dr. Joe, we're going to leave you alone until let's go read the book first.
Yes, thank you so much, because somebody had asked a question about how do you find out how to call or the bank. So at times the mortgage is financed by a bank, or it could be financed by a mortgage company. So that mortgage company will send you a monthly bill. So if it's not sent to you in paper form, they send it to you electronically, but the thing is many people don't even look at it. So from that electronic bill, you see the number to call because of the guy that asked a question of how to reach the company. Then another thing is regarding the tax office. You can, depending on your age, even without age, you can go to them and tell them that this is too high and they can lower it for you. So, and then if you're up to the age, you can get a homestead exemption. So that would significantly lower the tax. So I just wanted to add that.
Thank you, Prof. Guys, these are so many years of experience that people are pouring out for free. And you're receiving it just because you decided to wake up this morning and show up. Can you imagine that? And you know what is going to happen? That all of us, if you do the right thing, should be transferring this knowledge to your children before they start signing those mortgages. If at all they believe you. If they believe you. But bring them to book club, maybe that will increase their belief. My own children are on this book club, they don't have choice. But can you encourage them? Most of them are adult children, so they're not going to listen to you. But keep pushing, keep talking. Okay? All right. Let's go to the book. Okay? Everyone lower your hands. Dr. Joy, go ahead. Dr. Joy.
Okay, good morning. I just want to quickly share what happened to my family this last week. You know, over these years, you know, because of busy, we all are victims of this. People, companies keep charging us and we're too busy to look, too busy to even know when they pull the money. So we've been using this company, I'm not gonna name Company A, since I think we've been with them for about 16 years now, or even more. So every year it's like, everything is auto pay. Money keep zap from my account. So I happened to look at it. I noticed that this December, they charge us like over 3,000 something for 3 cars. And this is 6 months. And then the home went to 2,000 plus. And I'm like, what is going on? We didn't make any claim, nothing. So I decided I'm going to shop around. So I did that online, and I got another company that charged me for the same order, 3 cars, 1,711 from 3,000 plus. And then the home from 2,000 plus, it came down to 1,315 for the same deductions, everything. So I quickly joined the other company, and I got my refund. As we are talking, I went to the bank, online. I saw I got to refund 2,000 plus on each one of them. So right now I have 4,000 something back to us. We need to pay attention. I know we're so busy. Please, let's stop sometime and pay attention. Thank you.
Ina, you're going to cook rice for us.
Yes,
this
so
book club, next one.
I save
right?
money.
Because there's a lot of $4,000, guys. Guys, this is 4,000. Who knows how much of this 4,000 she's been paying for so many years?
Every year.
All are paying the price of ignorance. Guys, the price of ignorance is more expensive than the price of knowledge. I promise you that. And I'm happy you're here this morning. Guys, for those that join us late, this is a book club. This is a social club. It's open to the public. We're not representing anybody. We're just sharing our stories and reading book. Okay? This was a hangover of discussion. The last book club. That's why we decided to take care of it this morning. Thank you, Ms. Joy, for sharing your story. $4,000. For most of you that are looking for Louis Vuitton bag, or you have 100,000 in life insurance because you watch social media, they ask you, buy just 100 so you can build cash value, but you forget you need long-term care. You can go ask, can you add me long-term care? 4,000 can give you additional value. Instead of putting it in another person's pocket and they are playing golf and you're here suffering, going for second, 3, 4 jobs, and you don't have time to look. The first job you did, how did the money go? Hey, my people, this is my own experience, and that's why I feel so how which I can gather everybody and say, come, do you live in America and Canada? Come, let's sit down. Let's have conversation. Yeah, Mr. Emanuela.
Quickly, please, Dr. Joy, can you give us your phone number?
No. This is just share. This is just share. Just hang on there, okay? Emanuela, go ahead.
All right, thank you so much. The discussion has been going.
You muted yourself, Emanuela.
Oh, okay. Can you hear me now? Okay. I said this discussion has been going towards people who had mortgage already. Some of us that are planning to get mortgage, to get a house tomorrow, how do we leverage this knowledge while we're about to start?
The knowledge has already been given to you. So what else are you leveraging?
Okay, I shouldn't go through escrow. Is that what it means?
Again, we can't tell you what to do. Okay, we cannot advise you. We're providing you education. And people are here downloading 40 years, 30 years, 20 years, 50 years of experience.
That's correct.
It's now up to you to pick it up and shine your eye when you're signing the document. If you think anybody's going to say, don't do this, do that, they're sharing the experience. It's up to you to pick up that experience, the one that's going to benefit you, which if I were you about to sign, everything shared here today is an eye-opener for me. That will help me ask the right questions. Okay?
Dr. Ruth, can I give her one advice?
No, you don't give advice here. Can you make a recommendation?
A recommendation. Please, whatever you do, when you putting down your down payment, ask them, tell them, I do not want to get private mortgage insurance. PMI. Say avoid it at all costs. I do not want PMI, private mortgage insurance. Ask them, how much do I need to put down to avoid that? At all costs, avoid it, because it is pure money that you're going to be giving to another company for years and years. And even when you come up to whatever amount you're supposed to pay for your home, it's supposed to drop off. But we all know it doesn't drop off. They let you keep paying, and it's just free money you're giving away.
All right. So we don't give advice here. That's a recommendation.
Recommendation.
It's up to you. You take it. If you don't want to take it, it's your own.
Dr. Ruth, please, I also have a recommendation. I don't know if some of us here know about NACA. NACA doesn't take down payments, and you don't pay PMI when you get your mortgage from them. If anyone wants more information about that, I'm more than happy to share.
Okay.
Drop your phone number, please.
All right. Okay. Let's go ahead to read.
Dr.
Let's
Ruth,
stop
I
there.
have something to say as a real estate agent. So for PMI, you cannot avoid it unless you can pay up to 30% of that mortgage.
Exactly. That's what she said.
So you have to, but some people don't have that money. So under the federal home finance, they will say, oh, you can pay 3 to 5%. So people go for that. So because if your mortgage, let's say for instance, your mortgage is 300,000 and you are going to pay 30% of that, how much is it? Anybody do calculation? Then you see that it's gonna be
30,000.
30,000. 38,000. So it's not everybody that have it, but people, and remember, you're gonna put the closing cost. So they can just say pay 3 to 5%, then you pay your closing costs. And by the time you finish that, your closing costs, everything will be like 10 to 12,000. So which is affordable to a middle class initially starting life. You understand? So but the only way also for you to avoid the PMI is after like 2 years, you can then refinance. By the time you have gotten saved money, you can then refinance. Then with the money, with the value that is in your house now, and the little money you can add to it, you can then avoid PMI. But for a new, fresh person, you cannot avoid it unless you have like 100,000 cash, or you want to pull from your cash life insurance that you have saved money for. Then you'll be able to avoid it. You have to pay, but also there's another way you can do it. As a first home buyer, you can go to your city. The people, they want to help first home buyers. So you can go to your city and you can do some training if the city have it. And when you do some training, the city will pay your 30% of your mortgage. Then they knock off the PMI. Then the city will give you their own interest at a very low price. You know, when I was like 20 years ago, when we just came to America, we bought our first house. So it was what we did. And the city gave us the 30% at 3% then. And the bank gave us the 70% at 5.5. Did you see the difference? Then we were able to pay off the city own quickly. And then it's now remaining the mortgage. Then we keep on refinancing it until it came back to 3.5%. So you have to also be shopping and be looking at all these things for you to know. You don't just say, oh, they gave me 7% and you relax. From time 2 years, 3 years, when you think the mortgage, the interest rate has dropped, you can as well, call them and say, you know what, I want to refinance, the interest rate has come down. What are you going? Even there was one we did the refinance, and they only reduce it by 2%, telling us the only thing we have to do, no document signing, you just give them extra 600. So, okay. And they will just do the paperwork. So, but it depends on the bank, you understand?
Okay. So we're going to stop this discussion here, but who can agree with me that this is a valuable information?
Absolutely. Thank you all so much.
This is valuable information, especially that we're going to have the first generation,
the best information, the best information without reading the book.
Without reading, no, he's reading. We are reading now, but we are reading living people's experience. Remember, the book is people's experience. Now we are reading, the real people are writing the book in real time. Okay, thank God we're able to record it on YouTube so that anyone that missed that can come and listen. My people, these things.
You go to this YouTube, Dr. Ruth YouTube?
Yes, it's live on YouTube. Look at the link, you see it.
Oh, okay.
Okay. So, guys, get these things. Go watch it again. Listen to it again. All right. So let's go to our book. We'll come back to questions later. Let's go to our book, page 51. Okay. Page 51. Equipment financing. I guess it's part of what we're talking about now, right? Equipment financing. Who wants to read?
Read.
Okay, go ahead. What's your name and where you're calling in from?
My name is Bosse. I'm from Dallas, Texas.
All right. Okay, boss, I hope you're staying cold. You're staying warm.
Yes.
All right.
Equipment financing. Now that we have established the fact that a dividend-paying life insurance policy has all the characteristics of a banking system, let's refresh your memory of the step it takes to get into banking business, and then use the system to enhance the things that you are already doing within your regular line of business. All you have to do is to select an appropriate plan of life insurance with a quality dividend-paying life insurance company. You need to have a good administrative hired help and put some money into it. You must build the capitalization phase over a period of time, such as 4 years minimum. You may find it necessary to accumulate the capital over a long period of time. Indeed, additional capital makes the system more profitable. Whoever heard of grocer complaining about having to fill the shelf on 5 gondolas in the stores instead of 4? He knows full well that the additional merchandise will improve his profitability. Neither should someone complain about additional capital premium paid into a life insurance policy. There are no licenses required and no customer to seek out, no accounting, no engineering. It has all been done beforehand by life insurance company, your hired help. You surely don't get those advantages when starting up any other business. Suppose that this 30-year-old man who is in the logging business adopts such a plan and put 40,000 of capital per year into his banking system. For 4 years, the policy is a life paid up at age 65 with a premium of 15,000 per year and a paid up insurance rider premium in the amount of 25,000. See illustration on page 1. Notice that at the end of the first 4 years, the total cash value 157,363 and its cumulative outlay is 160,000, are practically identical. Beginning the 5th year, no further premium are required because the current dividend, 6,339, plus surrender of some of the paid up insurance will pay the base premium, 15,000. From that point on, notice that the death benefit at the end of the 4th year is 1,684,787. Compare it with the end of the 5th year of 1,651,077. The difference between the number is the amount of paid up insurance surrender to the annual 15,000 premium, resulting in no out-of-pocket outlay. His administrator, the life insurance company, lend the money out to various places, and after expenses of operation and paying out an occasional death claim, showing that he has something like 1,507,320 in the cash value 36 years later, which has a death benefit of 2,406,948 at that time. The death benefit has grown over the years because all dividends in excess of the annual premium are used to pay additional paid up insurance. This increase is all done on a tax-free accumulation basis. Taxation does not occur until amounts withdrawn exceed the premium paid into the policy. The insured is now 66 and is considering retirement. he can begin to withdraw 92,000 per year in dividend to meet that need from that point on, no matter how long he lives. Suppose he died at 85. At that point, he has recovered all the premium he has paid into the policy of 160,000 plus 1 million.
My people,
plus,
my people, listen.
This is
Cash value of life insurance
big.
at the end of the day is free. It's actually the cheapest insurance you can ever buy. Cash value of life insurance, permanent life insurance. Guys, we're not saying term policy is not good, but term policy is the most expensive insurance the United States and Canada can offer. I know you may start from the beginning, because if you look at this at the end of the day, if you know how to design these policies, operate them by yourself, have your own personal administrator, hired help, that's what they are called. Okay? Have your own personal administrator, hired help. Guess what? At the end of the day, all they were doing was holding your money. In fact, let me call it, your life insurance is your cash value of life insurance. Permanent life insurance, I can say, is a glorified susu with guarantees in it if you do your own part over time. It's not investment. It's a protection, just like your car insurance, your mortgage insurance over time. Don't allow people to deceive you. It gets into my bone marrow when I see a human being pay for policy for 5, 10 years, and someone comes to their home and deceive them to cancel the policy. And they actually did. And these are professionals with years of academic achievement, but economic misfit. Don't be that, because that person will eventually suffer. It's called premium. Premium. That's the reason they call it premium. Okay. Go ahead.
That point, he has recovered all the premium he has paid into the policy of 160,000 plus 1,588,000, and he still delivers 2,407,000 and 736 in the death benefit to his beneficiary. He could decide to draw a larger income from dividend credit, but doing so would diminish the capital base and the ultimate death benefit. Conversely, he could decide to draw a smaller income from dividend, in which case the capital base will increase, so will the residual death benefit. Under the scenario depicted thus far, the income will become taxable when the amount of income exceeds its cost basis. Premium paid in this case is 160,000. There is no need to dwell on this matter at a length at this time, as you see by the next series of examples. No matter how you look at it, the above is a pretty good scenario. But then, it draws on the young man. I'm paying 16,000 per month on that pool of money for the equipment used in my logging business. The finance company, the gatekeeper, the gate taker, is borrowing the money they lend from life insurance company, adding a subcharge to it and retailing it to me. See figure 2 and exhibit 1. Why? That's the equipment of my wife shopping for grocery at Winnie DC, when we already own a grocery store. So he asked his life insurance agent, can I finance a logging truck from my cash value? Of course he can. He outranked all possible borrowers in access to the pool of money that must be lent to make the life insurance plan work. Exhibit 1 is an exact copy of financing package on a new Peterbilt truck from a well-known finance company that buys blocks of money from life insurance company. Add an upcharge to it and retail it to people outside the gate in the Great Wall of China. This event occurred in 1984. He paid 65,790 for the truck, with 13,190 down payment and finance 52,600 for 4 years. To amortize the indebtedness require a monthly payment of 1,500 per month. Item 10. Now here on the page is an indication of an interest charge. It isn't required since this is a commercial loan, but it can easily be calculated. It is slightly above 15% annual percentage rate. At the end of 4 years, he paid out 72,096. Item 8. He financed 52,600. So a little third grade arithmetic revealed that he paid 19,496 in interest over the period. Divide the interest paid out by the total payment, and it will tell you what part of each payment interest is. It's 22 cents. Every time he pays out $1, 27 cents is interest. If he pay off the entire indebtedness over 4 years, if he trade in the truck in 2 years, then the ratio is much higher. He is making so living in logging, and the banking business is living well off him. So, what happened at the end of 4 years? Clue. The odometer on the truck reading something like 400,000 miles. He is back at Peter Beat's place, trading in his old truck on a new one. This time, the dealer may allow him trading value of something like 18,000. But the price of the new truck has gone up too, and he keeps refinancing about 52,600 on every truck he buys. That has been ongoing for years. His accountant tells him, look at how you are building equipment in your equity in your equipment. That's true, but he is building equity in a wrong place. He should be building equity in the banking business that finances his truck. Everyone should be in two business. The one in which you make your living, and the other should be the banking business that finances whatever you do for a living.
Did you all hear that? Somebody should mark that page. Everyone should be in what? Two businesses, right?
Mm-hmm.
Two business, the one in which you make your living, and the other one should be the banking system, business that finances whatever you do for a living. Hey, man, this is powerful. I've read this book before, but it's giving me a different look right now. Huh? Oh my goodness. Everybody say, no, buy mortgage so you build equity. It's a good thing. But are you building equity for yourself or for someone else? Buy car, you're building equity, you're building credit. I don't even know how they came up with this concept of credit. I really don't know. I'd like to know the history of this credit thing, how it came to be. Huh? But mark that. That's a very good statement. So we have 337 people here. So now we agree that we're going to do two businesses, right?
Mm-hmm.
The one you make a living and the one you use to fund all your livings, right?
Right.
If you're going to have financial freedom, if you're going to achieve financial freedom, if you're going to maintain financial freedom, you must be in two businesses. Unfortunately, the one you make a living may not need a lot of work. You go get that certificate, they put you on the job as a clerk. The one that finances your living requires additional knowledge outside of the classroom. Nobody will teach you that in the classroom, because those teaching in the classroom, if they know better, they may not even be in the classroom. They may not be in the classroom.
Yes, sir.
Okay? So I love this. I'm loving this so well. Okay? Who are you building equity for? If you're some kind of licensed professional, that's money. Can that be a prospecting language you can use for somebody? Mr. John, are you building a personal equity or commercial equity? I hope somebody took that note. Those who understand, right? All right, go ahead, ma'am.
the two businesses, banking is the most important. Businesses come and go, but banking is eternal. Just think about it for a moment. The richest man in US today is Bill Gates. The business did not exist 25 years ago. When he buys the truck this time, he doesn't use the finance company. He called his GoPal at the insurance company and asked, can I borrow 52,600 from my policy to finance a new truck? Look at line 4, column 6 in the next illustration too. And you will see the cash value is 157,363. Just like that, it was the previous example. This is the amount of money that the life insurance must lend to someone in order to make the plan of insurance work. Of course, he can borrow 52,600. Pay close attention to this point. It is vital that you understand that he must set up a loan repayment plan that equal exceed what he will have had to pay the finance company that he was using in the past. His life insurance agent should coach him at this point. The policy loan rate is 8%, but we are not going to play that game. We're going to call the finance company you were using and ask them what you have to pay if you finance it with them. That is what you are going to have to pay. Of course, the policy owner can tell him to get lost. I am not going to pay any interest at all. It is my money. Or maybe he said, I am only going to pay 3.9%, just like you see it on the TV commercial. In either of the foregoing responses, the life insurance agents need to take him back to the grocery store on page 15 and explain to him one more time. If he still doesn't understand it, he needs to take him back to the First National Bank of Midland, Texas, story on page 19, and go through it one more time also. If he still does not understand why he should pay retail market rate, then the agent needs to resign his relationship with him. Draw it. Draw a line through his name and forget him. Wow. He is either unteachable or he is a thief. Neither makes a good business associate, but if the agent is really good at his job, he will convince him to pay 1,600 per month. The extra cash flow become capital in the system and enable its goalposts at the life insurance company to lend more money to all those other borrowers. This extra money does not go to the general portfolio of the company. It goes to his policy that is being administered by the company on his behalf.
Did you all hear that? You must make a loan repayment plan. You know, people, it's easy to say, I'm my own banker. You go take the money and you don't pay back. If you're going to refinance, refinance or finance your car, your mortgage, any of those, you must pay back into your own bank. Don't shortchange yourself. That is what the book is trying to say. Don't say, oh, if your insurance company is going to give you 2.75% and the car or the mortgage is giving you 7%, you're going to pay yourself that 7% instead of paying 2.75%. And you have to be disciplined on S. Remember the grocery store. When you go through the back door, very soon your account will liquidate. Everything will disappear. You don't have nothing anymore. And you say, oh, those insurance companies, my policy just lapsed because you did not treat your bank the right way. If you're going to have respect for Bank of America, you're going to have respect for Bank of Dr. Joy Wigwe. That's the name of your bank. You're going to have respect for Bank of Georgina Abatam. Is your bank. The same day you're going to pay that loan, the same day you say you're going to pay the same amount, there's nothing like, oh, then my brother just died in my village. Did the bank hear that? My mother just passed away. Did the bank hear that? You still have to pay the bank regardless of what your situation is. The same way you're going to treat your own bank. If you should change your bank, my sister, my brother, you're in big soup. Big time soup. So if you're going to be your own banker, there are a few variables you must have in place. You must learn to be disciplined. Okay? You must learn to be disciplined. You must be willing to learn. Keep learning how to manage your bank. Because, the banks, they always reevaluate every year. They look at the report. They look at performance. You have to do that with your bank. You have to be willing not to get your knowledge from social media, but get your knowledge. The only mirror we have is the law. Anything outside the law is an opinion. It does not count. Man, I love this page, guys. This page 52. Okay. Financing. Man, I love that. Hi. Is that hi? Hachi? Iwundu. Iwundu, go ahead. Iwundu, unmute yourself. All right, let's keep
Yeah.
going. Okay.
Yeah, thank you, Princess Dr. Princess Ify.
Princess Dr. Ruth, the princess first before the certificate.
All right, Princess Dr. Ruth. I'm saying my own from a layman's point of view and is supporting whatever every other one is saying. Sometime last year, I made a little pause to be giving out money to the needy or in the church. I had one day I said I had no money. I had to borrow money from that little purse. I took the $300 I had in that purse. I said I will put it back. I forgot to put back that money. At a time I went back to it to get something. I said, where was that money? I remember that I took the money out and did not pay back the money inside the purse. So it was really very painful. So I'm encouraging any person that is doing such. If you borrow from your bank, make sure you put it back. A day can come when you will look back and you will find nothing inside it. So I'm speaking from a layman's point of view.
Lizzo, whatever that your bank is, if you know how you're going to treat your Chase Bank, your US Bank, your Bank of America, the same discipline. Oh, my children are in the hospital. I can't pay. If you tell the bank that, they believe you. Maybe they give you 30 days grace. That's the same way you treat yourself. Because that bank will collapse. It's going to collapse. Don't allow your bank to collapse. Please. Don't allow your bank to collapse. Who else wants to read for us from page 53? Thank you for sharing, Missy Window.
Welcome.
We are reading. Are you just joining us? We are reading Becoming Your Own Banker by Nancy Nash. Okay? If you are late, please go back to the YouTube to watch the beginning because today was special. You don't want to miss that beginning part. Who wants to read from page 53?
I'll do it.
All right, your name and where you're calling in from.
I'm Christine Yambura. I'm calling in from North Carolina.
Okay.
All right. Okay, page 53. So examine illustration 2 closely. Note the year 5, column 1, and you see negative 34,600 expressed as an outlay. This is shorthand for the fact that he borrowed 52,600 that year and paid back 18,000 or 1,500 per month. Notice that the debt is being reduced to 0 at the end of 4 years. Remember that the policy loan provision calls for interest at 8%, but he is repaying his policy at the rate of a bit over 15%. It should be obvious that he will repay the loan before the 4 years are up. The additional $1,500 per month becomes additional premiums and adds to the capital base. Go to line 36. His age is 65. And look at the cash value now in comparison with the previous illustration. Note that the cash value is now $1,988,254 compared with $1,517,320. He made $470,934 by financing just one truck with his bank. The gulpers at the life insurance company had nothing to do with this phenomenon. It was all on account of what the policy owner did. Note that the retirement income has gone up to $125,000 per year. Again, assuming death at age 85, he has recovered his capital input plus $2,034,800 and still delivered $3,119,289 to his beneficiary. The policy owner says, "That's amazing. Can I finance 2 trucks through my bank?" Assuming the same $52,600 financing package on each, total of $200,000, of course, he can. Look at illustration 3. Again, there is $157,363 available for loan at the end of the first 4 years. In this case, he must repay $36,000 per year in order to be an honest banker with himself. Now, look at line 36, column 6, and you see $2.4 million in cash value. He has picked up an additional $471,324 by shopping at home for his truck financing. In addition, the retirement income from dividends has gone up to $150,000 per year, and the death benefit at age 85 becomes $3.9 million. He is even more amazed and asks, "Can I finance 3 trucks through this system?" In this case, he's trying to do too much financing with too little capital. He would be much wiser to establish a branch office to his banking system by capitalizing another policy. Nevertheless, it is theoretically possible to do so with this one. Look at illustration 4.
How many of you, since the time we started reading this book, how many of you have gotten a new branch office?
I did.
All right.
It's here.
Katia.
Yes.
Who else have gotten a new bank branch office? Remember what the book said. The book said, on every person, either you or everybody that you have insurable interest on, as long as you're the owner, ownership here. If you're not the owner, you don't have any bank branch. Sorry. If you're not the owner, you do not have what? Any bank branch. It's not yours. But as long as you're the owner, you have a bank branch. Okay? So think about that. How many bank branches do you have? You see why you go to your church. They say, "Do you have anything to offer?" You say, "Yes." They give you a microphone. The only thing you will say, "I love you guys so much. Do not cancel your policy." That's all I need to hear from your mouth. How can you cancel a policy when you don't have enough bank branches? You only have one bank branch. And the only one bank branch you'd have, you close it with penalty even on top. So all of us here, can we take an oath, 340, that every corner we find ourselves? Anywhere you come across that say, "I have protection portfolio," beg them not to cancel it. I don't care whether it's stamp policy. Do not cancel your policy until you have the knowledge of the state law, not the knowledge of social media or your neighbor. Please, I beg you. Tell your children they should not cancel their policies. Yes, we are paying the price of ignorance. Why will our children pay the price of ignorance? If our children comes up again to pay for the price of ignorance, it means that we fail. You can have multiple bank branches. If it's only one you have, do you know the knowledge of how to use it so you can finance your own equipment? You can. You want to start a trucking business, home health business, doctor's office business, nurse practitioner clinic. Any of those you want to start, why can't you be your own finance? Unfortunately, we all don't have the banks. We're just waking up to this bank system. And yet, most people don't know how to manage the bank system. They're going to social media. I came across a young person sometime last year. See how big I am. She's bigger than me. But 3 years ago, she canceled her first bank brand that she got. And now, remember, in the banking system, they have to approve you, right? Both the commercial bank and personal bank, they have to approve you. It's not automatic. This time, they could not approve her. It's too late. She have the understanding now, but she could not meet the requirement. That's the danger of waking up and canceling policies. Because maybe she was just paying 2,000 or 3,000. Somebody deceived her. Why are you putting 3,000? Come and put it in the stock. My people, life insurance is not investment. It's a protection. And if you're going to build a sustainable wealth, it's not either or. You need your protection and you need your investment. Each of them has a role to play. Your protection, according to Jack Thompson, is for what? Is for safety, stability, and growth. The goal is not growth. It's for safety first. Stability and growth over time is protection. Look at it as your car insurance. It's protection. Who is it protecting? You that owns the car. But your investment is there to do one thing, and one thing only. What is that? To accumulate wealth for you. Then you can take it to go protect it in your protection portfolio and use it to fund your living. Use it to fund your living. In investment, you don't have to be approved for certain things. You can wake up as long as you have your money. You do the signing ceremony. Life is good. But in protection, when they are going to give you the money for free to start your bank, whenever you get a policy, somebody has decided to give you a free bank environment. Your job is to service your bank, right? Then you reposition. All you're doing is reposition of money. You're taking money from commercial bank to reposition into your own personal bank. It's all about repositioning. That's why they call it premium service. Your service in your own bank where you have the absolute control as the owner. And someone tells you, don't reposition, keep it in the bank. One lady told me, Dr. Reed, if I wake up and see the money in my bank, I feel happy. I said, this happiness may not last for a long time. Because if there's no constant supply of that money, I'm sorry, someone else is making a living. So, read books. Go ahead, my sister.
Okay, look at illustration 4. Notice the end result at line 36, column 6. There is $2.9 million in cash value. The dividend income at retirement time is up to $175,000 per year, resulting in recovering his capital input, plus $2.6 million in total income by age 85, and still delivers $5 million to his beneficiary. Remember, the wisest thing he could do is add additional policies to his banking system as early as possible to ensure his ability to finance his entire inventory of equipment. But
So what does that tell us? Remember what we saw the last time we read, or most of you that came here, okay? We saw our good friend, our very good friend here. Okay, those that are in financial industry. Okay. Now, you see why, hold on, let me see if I can find him. You see why our good friend here have this, right? You may be wondering, why can one person alone have 54 policies? Did you now understand what he's doing? Who agree with me? Why he has 54 policies? Because he's keep adding a bank, keep adding bank branches. He keep adding bank branches. Now, people will be looking at him because he's in charge of crypto. They followed him thinking that that's where he already have a bank branch that sponsor everything. He has 54 bank branches in his home. $54 bank branches, guys. How many do you have? Can you tell yourself 2026? I may add additional 2 or 3 based on if you could be approved. Guys, approvability, then affordability. Approvability and affordability. Because I noticed, those financial gurus that only they are good only on television. They were sitting down analyzing. Why does he have 54? Nya, 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 nya. Now you reading book, you see now why he has 54 branches. You can do the same. It's up to you whether you can afford it. If you have the knowledge, you play the game. Okay? Go ahead, my sister.
okay. But he can still improve on the results of the last example. Look at illustration 5. It is the same as the previous one until line 13. At this point, he can finance all 4 of his logging trucks plus 1 of the logging tractors. Logging tractors cost twice as much as trucks, and the tree shear costs even more than that. Now note the cash value at his age 65 is $3.5 million. Compare this with the cash value in illustration 1, where the company Golpers did all the lending to other borrowers, $1.5 million. And you see that shopping at home resulted in over $2 million in additional value. Also, note the yearly dividend in column 5. Line 36 in illustration 1, $71,000. Now compare it with the same point in illustration 4, which has $140,000. The life insurance company's dividend scale did not change. They had nothing to do with this improvement. It was all on account of what the policy owner did. The Golpers of the life insurance company made just as much money in the first illustration as they did in the last illustration. In fact, the Golpers cannot make a profit. They earn salaries and can earn bonuses if their efforts are superior, but only the policy owners can make money through improved dividends. The difference in results goes to his policy, not the general portfolio of the company.
The difference goes to his policy, guys. If you have the opportunity to put extra money in your cash value of life insurance, do so. Insurance companies are not making money off of it. They know where they make their money. Okay? They will make their money. Whether you put or not, they will make their money. But let me tell you, the only place I believe you can decide to put in extra money without worrying if somebody is ripping you off is your life insurance. If you have the right type. Of course, if you have a term policy, there's no room for extra money. So you're your own. You're just there, fixed. But if you have a cash value, everything where you cannot become your own banker by term policy unless you die today. Then your children become the banker for you. But while you're alive, you cannot become your own banker through what? A term policy. Unless you want to use it as a what? As a collateral for a loan. All right? Okay, that is the only way I think you might. If not, as long as you're alive, I don't know how else gonna become your own. So it's always gonna be have to be around a cash value of life insurance, permanent life insurance. Okay? Yeah, Mawija.
Yes, Dr. Rod. So I just wanted to say you can actually become your own banker with the term policy. Hear me out. So what I did for me, the first time I ever heard about this information, I bought a small policy. I wasn't sure at that time, like many of us. Then I bought a very large term policy. Just this week alone, I converted a portion of it into my own bank. So that's what, if you cannot afford to get a big IUL off the bat, because once you get a term policy, if it, especially for mine has living benefits, those same living benefits carry over into the permanent policy, and you don't ever have to worry about being approved at the same time. So you can start small but become big. If you can afford a big term policy right now, and with the opportunity to convert it into an IUL, I would encourage everyone to do so, because that's what I've been doing. Just this week alone, I've converted part of it.
So now that's a different conversation entirely. Okay? So what you're saying, which is exactly what I said. I said, I don't know how you can become your own banker using a term policy is impossible. This is true. Now, what you're saying, that someone who do not have money to become their own banker can start with just a protection purpose only at the little $1 they have, right? Now they can convert. Until you do that conversion, nothing happens. That's what we're trying to say. Okay? But one thing you must know, which I tell people, you can buy the policy. Nothing wrong with term. Get that right. There's nothing wrong with term policy. Whatever policy you buy is allowed by the law. Life insurance is not investment, it's a protection. But if you are on the premises that maybe, like I have my neighbor, I've been trying to help, because by the time we do all the financial needs analysis, nothing is left. Nothing is left. They're making good money, but everything is consumed somehow, some way. So it looks as if the only option we have is what? A term policy with living benefit, just to get that protection in. But the goal is that maybe later we can convert that to a permanent life insurance, which is what we're saying. If you do not have permanent life insurance, you may not be your own banker. But until you convert. Now, conversion, some companies give you limited time of conversion. Some you may convert within 5 years. Some you may convert within 7 years. Some within 8 years, depending on where you are. But this is the catch. Whenever you convert, it does not matter. The premium is not going to be on your current age. It's not going to be at that 5 years ago, or 3 years ago, or 10 years ago. It's not going to be. That is the danger. Another danger, that's why when people say my term policy have living benefit, that is correct. But living benefit will only be relevant to you if the policy is still active, or you convert it at the time you're supposed to convert. Most people even forget about it, and the illusion is created. I have a living benefit. 10 years has passed. Guess what? Policy have elapsed. And now they don't have the policy. The living benefit they don't have. So the living benefit does not make a whole lot of sense if the policy is not active, because it's just a rider. So my sister, what you say is true. Okay? As long as you're able to convert that, hear me out. As long as you're able to convert it before it expires, you are good. But if you forget, you see how our life is so busy, and God bless you, you didn't even know what the law says. You yourself, you're lucky, because probably you have the knowledge of the law. You have an inside idea. There's some people who have no clue. All they want, they have 10 minutes to submit application and sign their out, they are gone. Oh, do you have protection? Yes, I have my protection. They are going like lizard. By the time he's 65 years old, it dawned on them that the policy they have is gone. They have nothing. And then it's too late. Now you're 65 trying to get, you're 70, 75 trying to get a policy. Because the time you needed it the most, you have no time to listen. Okay? But thank you for sharing. Yes, if you're able to convert, but if you're not sure, you don't have time. I'd rather go buy a cash value of life insurance, $25, 25,000, and super fund everything else, super fund 50,000, 70,000. If you don't want to do 100 million like Paul Atkins, if you don't want to do it like Bill Gates, you can do the one of 50,000. There is something for everyone. But if you're here, you don't have one, my sister, my brother. If you don't have one, even if it's the time policy, you eventually have the consequences will be coming to your door very soon. And we don't know when that one will be. Okay? So thank you for sharing. Go ahead, man.
At this point, consideration should be given to how to improve the results even further. Look at illustration 5 and note the cash value at the end of the second year. Question: can a truck be financed at that point? Yes, but remember, he should continue to capitalize the policy for a total of 4 years. But anytime he can cut the bloodsuckers out of the pattern and have that same financial energy flow through his banking system, he should do so. It should be obvious that this will improve all the cash value results below that point. If it isn't, then go back and read this chapter over and over until it dawns. If it still doesn't register, then go back and review the grocery store story and the First National Bank story. If this doesn't do the job, then I don't know if I can be of help. Another improvement can be achieved by, hold on a second, by backdating, that's page 57, backdating the policy for 6 months. Most all companies allow this. Pay the initial annual premium now, but ask the company for a policy date 6 months ago. This way, it will be only 18 months before being able to use the policy to cut the finance company out of the pattern. The earlier you're able to do so, the better the results. This next improvement can be a big one. Go back to Exhibit 1, the finance company page. Note that item 4, insurance, takes up about 1/3 of the page. If they're going to finance your truck, they require you to insure it for comprehensive and collision coverage. That protects them against loss or damage to the equipment on which they have a lien.
Did you hear that? It protects them.
Mm-hmm.
Do you see why that car insurance is mandatory by law? Who owns those companies? You or me? Neither of us. It protects them from loss, not you. They don't really care about you. They don't love you for nothing. It's part of the business ventures. Who is protecting you from loss? Your real estate mortgage, your real estate agent or real estate investor. Who is protecting you? The bank is protecting themselves from insurance company. They go to insurance company. Insurance is their core financial strength. What is your own core financial strength? You protect them, not you. But the one that protects you is the one you go to online to say that they tell you it's a scam. And you cancel what you have. And you didn't even know that is your money you're wasting. You think you're hurting insurance company or the agent. No. It's your policy. Now they tell you, why you haven't policy on the children? Who owns the policy? You. The same ownership you're going to execute here. The same. Now you know that it's not just for debt. You can become your own banker. How many bank branches have you secured for your children? You are the bank director right now. You hand over directorship to someone. How can you hand over what you don't have? Go ahead.
Liability insurance is another matter. It protects you against a possible lawsuit due to what your equipment may do to someone else or their property. The finance company does not require this. It is just good business to do so. But guess which coverage has the biggest premium? Right, comprehensive and collision. Typically, it runs about 75% of a fully insured premium. Notice further that all the banks in item 4 have not applicable inserted. That's because the finance company cannot force him to do insurance business with them, although they would like for him to do so and finance that premium too. In this case, he used his own property and casualty insurance agent. His premium was $2,100 per year per truck for $1,000 deductible.
All right. All right, my people. We're going to stop there. We're going to start on page 57. On the 14th, we're going to read on the 14th. And we're going to read. Give me a second. Okay. We're going to read on the 31st and we're going to read on the 14th to make up for the 7th and 21. Because 7 and 21 we can read, but on the 31st we're going to read, January 31st, we're going to read on the 14th of February to make up for 7 and 21 of February. So mark your calendar, okay? 31st and 14th. All right? All right, man, this is amazing. This is amazing. I love this. I'm happy we're reading this, okay? You know, most of you have those your financial experts that you're supposed to hire. It looks as if they're hiring you by telling you what to do. And they will tell you have liability insurance. Liability insurance is just for a lawsuit. It has nothing to do with your banking system. Did you get that? I have doctors here help me understand. Okay, the liability insurance is another matter. It protects you against a possible lawsuit due to what your equipment may do to someone else and their properties. When you ask some people that have business, is your business protected? They say, yes, I have liability insurance. That is not what we're talking about. We're talking about continuity of your business. Do you have your key employees? Do you have your exec? If you cannot run this home health today, who's going to run it, or is it going to end? That's why they say most businesses for middle class end on the first generation. But look at Walmart. Look at McDonald's. Look at JCPenney. Look at Sam's Club. The people that started them have long gone. Why? They have sustainability. They have a plan in place through protection. Through protection. Then they invested and keep funding that protection. Because you can do the same for yourself, for your children, and for your generation to come. Okay? Wow. Thank you so much for coming to reading today. I hope your eyes are open. Next week, Saturday, come on time. We're going to finish on time because we have other engagement to take care of. Okay? So, man, I'm so blown away. Sometimes I don't want us to stop. But what has a beginning must have an end. Okay? Any question, any comments? Any question, any comments?
Dr. Ruth, did you say next week, Saturday?
Yes, ma'am. We're going to read first 31st of January, and we're going to read on February 14th. February 14th. Mark your calendar. The same Zoom link. I see people keep asking me for Zoom link. Our Zoom link for book club remains the same for the year. The same Zoom, invite people, okay? Invite people, do a watch party, read. Get your children to look at these things. Come out of social media, guys. That is not where you learn money. Trump does not learn financial education from social media. Neither Bill Gates. They sit down, they study, and they hire people, they tell them what to do for them. Do the same for your own family. Okay? And you're going to win. And I appreciate all of you. We had over almost 370 people this morning. Okay? That is amazing. Remember, this is open to the public. Invite anybody, your church members, your pastor, everyone that touches dollar, US and Canada need to read these books. I've read this book before, but the understanding I have now, we're reading it as a group, is different than the understanding I have when I read it on my own. Okay? It don't have to belong to where I belong to. You don't have to go to the same church I go to. You don't have to drive the same car, but one thing that is universal among us is money. Whether you go to clock in or you run a business, at the end of the day, what do you make? Is money. So learning how to manage your money, for your money to work for you, is everybody's responsibility. It's not a choice. If not, you're not going to achieve financial freedom. Okay? You will not. And Manasa, go ahead. By the way, thank you for your instigating some discussion this morning. We appreciate you.
Thank you so much, Dr. Ruth. Last week when we were here, or 2 weeks ago when we were here, I had also shared the story about how my daughter, who was only 11 months old, her policy had been denied because they had seen budesonide on there. And I said, I pray that I come back here with a better report. And I'm here to say I do have a better report. After sending in the letter, she was approved. So ladies and gentlemen, I just want to say thank you, God. And I needed to come on here and share that we need to fight for our family members and also for our clients. Don't just accept the answer, write a letter. Once I let them know it was just a simple cough, they said, all right, so she's been approved. So I just
Awesome. Thank you so much for sharing, guys. That's what happens when you're in charge of the knowledge. And your knowledge moves you to understanding. Understanding brings transformation. That is what it means. I will not be silent. I don't have control over this. I don't have copyright. But I will always
watch.
Always. You must open your mouth.
Princess,
You must learn.
You are a saint in our generation. You are a saint.
Thank you.
Thank you. A saint.
I appreciate all of you. Thank you so much, guys.
God's favors daughter.
Thank you. So let's go back. Use the knowledge for our community. Gather your children, especially your adult children who are busy watching social media. Beg them. Tell them that the only gift you have to give them for the remaining part of your life. All of us sign a contract of 120 years, right? For the remaining 120, you have to be here. Beg them that the only thing you have to offer them on this earth is financial knowledge. Tell them, please join me and listen to this. Have an open mind. Move away from slavery mindset.
Yes.
And come. Look at, the person I've been looking at here. Dr. Inta. Can you unmute? Your name, sometimes I don't know how to call it. That's why I need to take a lead from my mentor. He can call all names. Dr. NTIASAGWE. Can you unmute?
You're talking about me, Dr. Ruth.
Yes. So how do you say this last name?
Huh?
So the N is silent.
Somewhat, yes, ma'am.
Okay, that's why we've been trying.
That's Igbo name. That's Igbo name.
I don't know English. I was trying to use English mind to interpret Igbo name.
No, ma'am. It's Igbo.
So as I was sitting down here, I've been looking at her. I've been looking at her. Go to her and ask her, what does it mean to be a professor? All education in the world. This person have no right to sit down here.
I know.
But she will tell you better. I've been here watching her. She put in all her attention. She never moved an inch. I've been watching. If this person, the amount of PhDs that is there, if you package it, So what are we trying
Thank
to
you,
say?
ma'am.
Thank you, man. I don't take it for
Thank
granted.
you.
It's an honor to have you here. What
Appreciate
I'm
it.
trying to say is that let's
Yes.
go back to the basis and tell everyone we need to tell and say, come, there's a place you can get free financial education. And not just theory, but reality. You see how Manessa just shared her story. If they decline anybody's policy, your sister, your brother, your uncle, and it's because of anything in the medical record, go fight for it. That is something. Go fight for it. Don't just say, I'm busy. Let me show you guys something. Let me show you something right quick. Give me a second. See, all the people that say, I'm busy. Hey, hey, God will deliver us. There's no amount of prayer that will deliver you. The deliverance is only in your hands. Okay? So let me show you what I want to show you here. So Martin Luther King, this is what I saw. Did you see what it says here? You know what is our responsibility this year? We will not be silent. He said, our lives begin to end the day we become silent about things that matter. So if you decide to keep silent, or you say, oh, my children are American children, they know how to do their own thing. Now lie, at the end of the day, it boils back to how much that is in your pocket and how it works for you. Some days you might be harsh. Some days you might come in a calm voice. Either way, keep fighting until the needful is done. But if you keep silent, because you don't want anybody to abuse you, don't want anything, you already started dying. Your life has started ending. Especially, what is that matters? Money. Let me tell you, money discussion is either going to make you or mar you. If you're on the positive side, you will have happiness. If you're on the negative side, you will have what? Stress. Stress will mama you, especially when you look up. Nobody is coming to help you. Nobody is coming to deliver you. It's either you deliver yourself or you don't deliver yourself. So don't keep quiet. Don't keep quiet. Your grandchildren, they cannot come and make the same mistake we all made. That's why we started reading books. Because they say if you want to hide something from the books, from the people, put it in the book. For most of you that are new, don't even know how book club came. When I came, I have a mentor that loves self-education. When I came into financial space, I have a mentor that loves self-education. And me as an educator, I said, how can I give back to my community? How do I get them to open this book? That was because the more I read, the more my brain kind of rewiring itself. I like, who do I come to say, come? That's why I started book club with about 6 people. I know those 6 people are still sitting down here today. I said, no, there's no need to hide this. Let's go public. That's why you are privileged to be here today. And now we can have, people say people don't like to read, they don't have that. Don't we have over 370 on this call this morning? It's all about value. When value comes, there's always, value is what creates paradigm shift. Value. No matter how busy you are, once you find value, you engage in paradigm shift. I'm telling you. Precious, go ahead.
Thank you so much for this opportunity, Princess Dr. Ifedira. Thank you so much. Yeah, honestly, this is my first time here, and
you've been missing a lot.
Yeah, I tell you, I got so many things that I say, wow, I should have been here earlier. You are so informed, and God bless your heart. So being a professional, a pro in this business, man, I just need your advice on what to tell this sister.
Okay. Slow down. Stop right there. So this is book club. Anything outside of book club is private. So if you want to talk to me or text me, if you have a private question, you can call me on 469-487-3469. 469-487-3469. I will answer your question, or my assistant will get the message and reroute to me, either way. Okay. So
Thank
my
you.
sister, thank you for joining us. All we do here is we read books. It's a social club. It's open to the public, and we are live on YouTube too. Okay. For those that either the sleep took over their time to wake up, or they have a bad weather, I'm putting it in the chat. And also join us on GroupMe Book Club, and you can follow me on Facebook, follow me on TikTok, follow me on Instagram, YouTube. Look for Dr. Ruth Ifedere. All right, you're gonna find me. Ask me any question, I can answer you. Okay, and I'll be happy. I love for people to ask me difficult questions. That's how I learn. I go find it. All the things you guys say here, I take note. My book, you see, my book is open. That's how I learn. I take note.
I don't see the people.
Okay. I take note and I go from there. So I think that question is a little bit private. So I'll be happy to answer you outside of this public. Gloria.
Thank you so much, Dr. Princess Ruth. My sister that just said something about her child was denied, and right now she has been approved. I have the same problem because my 13-year-old, I took her for her annual visit, and she made a comment that she wanna kill herself. So they put it in her record, and when I did the policies for my family, only her was denied. And I'm trying to know how to fight it so I can get a policy for her. She's only 13 years old, and it's just my nightmare. You know, I just feel so bad that she don't have a policy. How do I fight that so they remove the suicidal thing off her record? Because she was being bullied at school, and yes.
I didn't mean to cut word from anybody, but this actually happened to a client last week for me as well. The young lady was 13 years old. She made the same kind of comment. She went to a friend. The friend went to the school counselor. They called the parents. Child had to go to the hospital. Here's the thing. I don't know, Dr. Ruth will also add her recommendation. But once some companies, I won't say all, but once a company sees that there is a suicide risk, remember, the insurance company is in the business of risk management. And so when they see that, the child or the person becomes a high risk kind of person, and that kind of, they don't want to take on that kind of risk. Are you following what I'm saying? So
yes.
That was something that happened to one of our clients whose child was 13. The child had made that comment, and she was also denied. Dr. Ruth can also add to this when you can reapply for that policy, or wait a few years. She's 13. Maybe you do it when she's an adult. But that same situation happened this week, and that was the recommendation, because I want to use Dr. Ruth has encouraged us to use, that you may wait.
Thank you so much.
All right. So our time is up, but let me say something here. America and Canada is the land of law, and the law must stand. That's why if you're on this call, there's one thing I would like to encourage you to do for me, and that would be for your family. I would like you to get a life insurance license. It gives you legal capacity to be in control of what you do. Suicide is one of those exclusion clauses if it happens within the first 2 years. Can someone mute themselves? This is very important now. Now is already in the record. What is insurance? Transfer of risk from one person to insurance company. If they're going to take your risk and the risk is already there, I'm not going to take it, right? You're not a risk-worthy person. So they're not going to take it. So now your question is, how do you fight it? Now, each time they decline your policy, I'm a licensed financial professional, and I tell people I'm competent when it comes to protection portfolio. I sleep and dream and eat about it every single day, because I want to make sure that people like you, we can fight for you.
Thank you.
So When they deny any policy, they're going to send you a small letter. Small letter. When they approve it, they send you a big booklet. When they decline it, they'll send you this small letter. Inside that letter, most people don't open it. So, Gloria, go back to that letter they sent to you. Open it. There is a number there that said this is a number to call to contest the decline. Secondly, if you're United States, I don't know about Canada. You see, the same way they have criminal record is the same way they have medical records. And I noticed that these medical records are housed around what they call Milliman. I don't know who that Milliman is. So you have to look for number for Milliman. So what is the pathway I would recommend for you? If you want to fight anything that is not your record, your first place is that doctor, whoever that have the authority to sign. That is why I need you guys to put me. Can you bring the doctors? Every person that have the capacity of diagnosis in America and Canada, can you bring them in front of me? Maybe I need to read this book with them on a special note just for them. Because physicians, providers, anyone in the diagnostic level have the capacity to make or mar someone to get a protection portfolio, which is your personal bank. So they are in the center of protection portfolio in America. That's why in Canada. That's why it's different from investment. If they have this knowledge, they will help so many middle class. They will have so many people. That is why, do you know what? My primary provider is here. My primary provider is a licensed financial provider. Where is your own primary provider? Go find them. Teach them finance. They will help one more person. Could be your family member. Right? So when they say this is declined due to this medical problem, the first place to start is go to your doctor. Make an appointment to whoever that person is. And said, in my record, they say I have ABC. They have never had that. Let me tell you, that first comment triggered so many fears among them. Especially if maybe they have made, the new technology, people copy and paste. Sometimes they make mistake. They copy something from here because one provider is seeing 30 patients. Tell me, what are you going to cure in 30 patients in a day? Hey, providers, where are you guys? What are you going to cure? What is that you're caring that you have to see 30 persons, 30 in a day? So some of the ways to overcome those kind of overload of work on them is copy and paste. That they now copy and paste, they may forget to take away from the person they copy and they paste here. This is my 5 years of encounter I'm sharing with you here. So start with that place. Sometimes your problem can be solved at that level. Some doctors, some providers are so sincere to themselves. They say, oh, that's a mistake. They will write a letter and give to them. And they take it, okay, to insurance company. Insurance company will honor it. But your problem may not end there. Some of them you have to do a little bit deeper. You have to take that letter. You have to ask that doctor's office, medical record. So many people are going to be involved in that mistake. A lot of people will be involved. They all have to correct wherever that mistake is. Then they have to take it to Milliman for the Milliman to correct the report that is over there. If that is where they got it. They will correct that before insurance company will act on it, depending on what the situation is. Don't waste your time going to insurance company if you have not done your due diligence on this side. Insurance company are just looking. They are not doctors, they are nothing. Right? They are just looking. Is your doctor's problem? Is your provider's problem? The hospital problem? The medical records? You have to work with each and every one of them. It's not a joke. I've seen a client that the doctor just fired. The client went back and threatened to sue. It's a big situation because it uncovers so many things. As those things are so, but you are in charge of your own family. Fight for your family until that thing is removed. You're not fighting because you really want, it's just for the policy. You know the implication. If you don't remove that thing in your record, and you happen to be involved in these emergencies that you're not able to speak, and they decide to go through the record, they're going to treat you based on what is in the record, which is not true. That's the implication. Do you see that? So everybody here, if they decline your policy and it's not what is in your record, don't say I'm too busy. It's going to impact you negatively, whether policy or no policy. Okay? So start from the doctor, get to the milliman to sponge that thing from your record. Then, whatever is sponge, I have encountered a client that it took us from, let's say, November to May to fight because of medical records. And I love this client because the client took it upon herself. She stood her ground. She went to so many organizations. So many people were impacted. She went to all of them. They send her here. She goes here. They send her. Everything they ask her to do, she makes sure that record of so many years, almost 10, 15 years in her name. But she stood her ground. She said, no, I don't have this and it cannot be in my record. Guess what? At the end of the day, she got her policy. She even increased it, and she's now here advocating for people to get protection. That's what it does. So yes, if they decline your policy, please go fight. As long as that is not in your record. What is another thing we're going to bring to you, my community? When you go to that provider office, that clinic, whatever they want to know, what is it in my record? Start knowing now. Don't wait. Prevention is better than cure. It's more easier to prevent. Now we're aware. Okay? Please check what is in your record. What are they signing? What medication? If they give you medication, please make sure that if you're not taking that medication, don't stop it on your own. Make sure you go back to that doctor and say, can you discontinue this medication? I don't take it anymore. Number 2, if you go to emergency room, all of you that like emergency room, if you go to emergency room, if they give you medication, please make sure that if you're not taking that medication, don't stop it on your own. Who is doing that? Make sure you go back to that doctor and say, can you discontinue this medication? Oh, okay. I'm going to mute everybody now. Number 2, if you go to emergency... Somebody is watching YouTube at the same time. They are here. Okay. So number 2, if you go to emergency room in America or Canada, what is the last thing they put in the emergency room note? Go to your primary doctor. Go to your cardiologist. Whatever they say, please go and tell them to discharge you. Make sure that discharge is in the record. That is another point of decline for you to get a protection portfolio. And that is where you can be able to get your own bank. If you visit any doctor's office and they say, oh, nothing else left, tell them on the chat, discharge me. Don't say for follow-up. You know what the insurance company is going to do? They're going to look for that follow-up. What is the record? So if there's follow-up in your chat, ask doctor, which follow-up am I following? If there are labs they ask you to do, some of them, some of them write their notes after you have gone because they have a lot to do. I pity these people. Make sure your providers have enough protection in all round. I pity them. So when you have already gone, they remember they need to order lab for you. They order the lab and they tell their assistant to call you, to call the lab people and order the lab and call you. Most of the time, sometimes, the assistant will go order the lab, either EKG or whatever, and they forget to call you. And you didn't do nothing. Now, when you apply for protection portfolio, they say, hey, on so date, 5 years ago, 2 years ago, they ordered the lab, you didn't do, and all that. You begin to scratch your brain, which lab? Because you are not aware.
Dr. Ruth, I have something to say concerning
Hold on. The next one, psychiatric diagnosis. See psychiatric diagnosis? My people, I can say it, I'm a provider. I'm a nurse. I know all of them. Psychiatric diagnosis. Make sure you have a discharge in your chart. My people, do not stop medication on your own. Go to your doctor. Go to your provider. Have a conversation. They have your interest at heart. It may not matter today, but it's going to matter later. Number 5, do not get prescription for another person in your name, especially you providers, because you know you can write, you say, oh, my uncle is in California and he needs this medication, but he doesn't have insurance. Let me order it on my name. Hey, men are pregnant too, according to insurance company. Why? Prescription is on another person's name. Do not order medication that is not yours under your name because the other person don't have insurance. Let them pay out of pocket. It counts against you in this country. In America and Canada, it's going to count against you because it's in your record. They keep them. Those records are there. Most of you that are immigrant, maybe you get some treatment for your loved ones overseas. The medications are ordered under your name. You're not doing yourself a favor. It may caught up with you later. These are some of the few things. As we read, I will bring some of them up because I encounter it every single day. Every single day. And that's why we're here to share knowledge so our community will be aware. Prayers cannot change this, so it's knowledge. Prayers will not change this. But knowledge, God have answered your prayer for you to come to book club. Miss Ije, go ahead.
So I wanted to say something about denying of policy. When I have no knowledge of financial education, I got into this to do my policy, and denied me because I went to the doctor one day like that, and he said, oh, I feel a murmur in your heart. He actually directed me to a cardiologist, which said, it's minor, it's not of any importance, it's okay, you're good. But it was my fault. Then when the policy comes, they denied me. I was running crazy like, well, I'm not sick. I don't have anything in me. I talked to that agent. I said, look, I am very healthy. I'm a Christian. If I have any sickness, I will tell you. She said, well, it's not in my hand. I don't know what to do. She said, the only thing you can do is, she went back and the guy said, unless she goes back and do EKG, do ultrasound, do stress treatment, do MRI, and do echogram, 5 of them. I said, okay, I'm going back. So I went back to my cardiologist. I said, you know, this diagnosis you put on my distance. So I didn't want to, I work with state and they said prevention is better than cure. So I want to make sure that I'm going to do all these tests so that we know the next option for the treatment. And she said, okay, she will go to insurance company to find out if I can do that. So luckily I work with the state and they approved it because they are into preventive, you know. So one day she scheduled all the exams the same day. So I left office at my workplace at 8. I went straight to the hospital. I was there till 3:30. She did stress test, they did EKG, they did echogram, they did MRI, and they did one other test, 5 of them. And she did it, all of them. And she said, okay, you can go. You'll come back in next week. So next week I went back and she said, everything comes out good. I said, hey, you sure? She said, yes. I said, okay, can I have the document? I didn't even mention any insurance thing. I said, can I have the paperwork so that I keep it record for myself? She said, no problem. I will tell them to photocopy it. And they gave me this thing that is up to 50 pages. So that's how I scan it. Then I went to my insurance office, my real estate office. I scan all of them straight to the agent. That's how I started getting life insurance. Then I got that one. Then before I become financial education and got another one. So you can go back, like Dr. Ruth said, go back to your doctor. If you need to do any test to clear it, go and do it. You will get it. If not, I won't have anything like life insurance today. Thank you, everyone.
Guys, she stood up for herself. But one more thing, if I'm in your situation to add. Now, doctor, I don't have any of those. Can you remove this diagnosis of murmur in my record, right? Can you remove that? Can you say this client do not have any murmur in her heart? So you want to see that in your note. You want to see it with the date and the signature. Because if everything says clear, why do I have the diagnosis again? Okay. Chris, I have 3 hands up and we're going to end there. Chris.
Thank you, Doctor. Thanks everyone for this Saturday morning education. Yeah, this issue that we're talking about, the medical record, I'm facing an issue with my son about his own medical records. His police have been declined for the same thing. In 2020, we went for his primary care checkup, and the doctor said, oh, it seems his heart is not beating correctly. They sent him to the cardiologist, and the cardiologist wrote something in his record. He was 15 at that time. They wrote something in his record 1 month after he turned 16. That time, I don't have access to see his medical record on the chart. Because they wrote something, they did a test, and they said there's a murmur on his heart. So when I put in the policy, they say, oh, they say that he have, and they actually wrote that he have a cardiac event. So when the policy was declined, I said, but they refer me to go to Milliman. And if anybody have any good experience with Milliman, you call, there's nobody to answer you. You write, nobody is replying to you. So that is, I don't think that is even humans that are working in that place. It was so frustrating. I tried everything and I got the records. When I asked the primary care provider, did my son have any cardiac event? Because I don't remember, it's my son, I never seen him having any cardiac event. Can you guys, and there was no follow-up from there. So I said, what is going on? So I struggled, and unfortunately, he's no more home. He's really out of home, and he's in the military. I'm trying a way to try to figure out this thing. So he came on during December. I was able to get him to the cardiologist. We went to the cardiologist, and the cardiologist did the EKG and checked and said everything is fine with him. And even before joining the military, they checked and everything was fine with him. So, but the cardiologist just said, okay, he should do the MRI just to conclude the policy. He did not have enough time to be. We went to the cardiologist, and the cardiologist did the EKG and checked. Yeah, so he went back. I'm be struggling. He have not been able to get the MRI, and very soon he may be leaving to a foreign country. I'm so frustrated. I don't know what to do.
I know that it can be so frustrating. Okay. So what does it tell us, all of us here, is that we're going to become more vigilant and look at our records. Okay. And if it's there, it's there. As in, if you have the diagnosis, you have the diagnosis. It's nobody's fault, right? But it's painful when you don't have it and it's in your chart for any reason. That is where the pain comes.
Yeah, and another thing I just want to say, those of us who have kids, please, when your kid is 16, that they are preventing you from accessing their chart, do everything possible to have that access, because it's from there that any after note that comes from the doctor is in need, you will not see it. And that have affected me with 2 of my kids. So we should try everything. I know, because I'll be telling the doctor, this is not right. How can my child, they're preventing me from seeing his medical record on his chart? So we should always try everything to have it. Talk with our children to try to get it, to have access to it.
So my people, please protect all your kids now. You're the owner of the policy. You're the banker. Protect all your kids now. It's not all about debt. We need protection portfolio and investment portfolio to achieve financial sustainability. So protect them. Now, you are the owner of the bank. When they grow, even the Bible said, train up a child in the way you go, and when you go, you will not depart from it. This and protect the child when they grow. You give them the protection. Okay, you hand it over to them. Guess what? If they grow, they feel that they are good, they don't need it. Cash out your money and eat. While you're alive, what do you have to lose? Nothing. Okay? Nothing. Don't be a victim of ignorance. Emilia.
Thank you so much, Dr. Ruth. So, yeah, what we are talking about is very, very important. So, Mr. Chris, I think one thing you can also do is request the medical report from Milliman, so that at least you will know what is in your. You can do that.
I think he got it. I think he said he finally got it. Milliman is not easy on my people, like Mr. Chris said. But before you get to Milliman, your Milliman could be your first point of contact if you actually want to know
to see what is
in the record.
inside. That's right.
Because the insurance company will not give it to you. They will say if you want to know why, they may give you some of them, but they may say due to what is in the record. So
That's
for
right.
you to know what is in the record to start your fight, Milliman could be your first
The
point.
first. That's right.
But if they have told you what it is, then your doctor's office could be your first point. So either way, okay, this is US. I believe Canada should have also the same kind of thing, okay, in terms of where the medical records are housed and where the insurance companies are looking at. So if
so
anybody
I didn't finish what I was
Okay, go
about to
ahead.
say.
Go ahead.
So I had 3 cases for myself. First, my 2 of my kids were declined. One because he had surgery, and I had to reach out to the doctor and then told them to get surgery. Everybody does surgery. He plays basketball. And then after fighting and fighting, later on, he got approved. Then I had a younger one who is a teenager, 12-year-old, the same mental stuff, because, bullying at school. And then she reported, that stressed or depressed or whatever. So they declined. Then I went back to the doctor. He said, listen, is it a crime for a child to tell you what he is facing at school so that you guys can help? Now, I know it's this in her record, but she has gotten over it. And after fighting, we had to go back, and then they wrote in her record that it has been resolved. She doesn't have any issue with this no more. And with that, we did apply to a different company, and she just got approved. So we have to fight. And it happens with some clients as well, but we have to fight. And when we keep on fighting, we'll be able to get everybody insured. Thank you.
Thank you. Thank you so much. You have to fight for your own. You have to fight for your family. Don't say I'm too busy. At the end of the day, it's for you and your family. Please fight for them. Fight for them. Let them get those things that they deserve. Remember, if you keep silent, your life begins to end when you start keeping silent on things that matter. Miss T.
Yes, good morning, everybody. Thank you so much, Dr. Ruth, for all you are doing. I also just wanted to add quickly, my niece, my nephew died, and one of my nieces was so emotional. And guess what? They said, oh, let's just get, anti-anxiety. The office, of course, they knew the doctor they wrote, but when they were doing their paperwork, they wrote that, severe psychotic disorder. Had stomach, she said, my stomach, I feel queasy, irritable bowel syndrome. So now she wants to get a policy. Guess what? They said the same things. So she's now a medical doctor, and she had to argue. We argued. I helped her argue that case, say, hey. And she never even took those medication. Luckily, they agreed to what we said without going back to the records, but not everybody is lucky. Sometimes you'll find you have to fight so much, and she wanted something big. So please make sure you clear yourself. Thank you.
Thank you. Thank you, Manuela, the last speaker for this morning.
Thank you, Dr. Ruth, for giving me this opportunity. Last time we talked about when you have a portfolio of your own bank, you don't have to have car insurance. I did not really understand that aspect of that discussion, Dr. Ruth.
So we'll put that in the parking lot, but we never say you don't have to have car insurance. That's not what it is.
Okay.
But we'll keep it in the parking lot. Anyone that can, I remember, I forgot you talked about that. But what we're saying, it was mentioning between liability and comprehensive and all that. Again, it
Yes.
depends. But let's put it in the parking lot and talk about it next time.
Okay.
Probably when we come on the February 14th, because January 31st, we may not have a whole lot of time. Like we are enjoying the luxury of extra time today. But
Okay.
but if anyone that have more knowledge on that, how that works, liability, comprehensive, most people have something, how they plan it, we'll be happy to have an open conversation on that. Otherwise, I want to say thank you all so
Dr.
much.
Roth, please, can I say something? Good
Hey,
morning. Thank you
good
for
morning.
what you are doing. I don't know if I should share it with you privately or I just chip it in now.
As
Oh,
long as
It's
he has,
open.
we are not representing the organization here. We are
No.
open
I
to the
just want
public.
to, because there are some people that have been complaining of all this insurance, not declining, declining. And many, many more things that we've been struggling with in this country that we need answers to. So there are some people that you can just contact and they will do everything for you. So if I should share it
So
later?
you can go, let's talk offline, because this is
Okay.
one thing we don't want to do. We don't want to refer people to somewhere and they're like, where do you get that information from? The book
No,
club?
I'm a member,
Yeah.
that's why.
Yeah.
I'm a member.
So go
we
do
need
your
to
own
share.
due diligence. Those people that say I will do everything for you, I don't believe in that.
No.
I want to have
I will
absolute
explain to
control.
you. I don't want to, because it's
So call me,
Let
we'll
her
talk
share,
about it.
Dr. Ruth. I'll call you.
Well, let's talk offline on that. If it's
Yeah.
something that will benefit the people, then we'll
Yes,
bring it back
benefit
next time. Okay?
everyone, anybody.
All right. You have my number, 469.
Yes, I have your number.
Okay. So we'll talk about it and we'll bring it back next and we'll read, okay?
Yes, ma'am.
And someone I know someone is
I'll
always gonna
remind you.
remind us. Okay.
You will always get reminded because something I say everyone needs to know. So I'm anxious to know because I want to learn like Dr. Ruth.
No. Thank you all so much. Thank you all so much. Enjoy the rest of if you're in
Wow,
Texas.
thank you.
Thank you,
You
ma'am.
too,
That was
Dr.
very
Ruth.
helpful.
Stay
Thank you,
cool.
Dr.
Stay
Ruth.
warm.
Thank
And
you.
you always be the best.
See you later.
Amazing.
Oh my God, somebody's voice is like a musician.
Thank you.
Thank you, Dr. Ruth.
Thank you, Dr. Ruth. Thank you,
God
everyone.
bless.
You grow quicker. You build resilience. You take risks. You become bolder, more creative, more alive. Because now you're not living in fear of getting it wrong. You're living in pursuit of getting it done. And listen, people don't connect with perfect. They connect with effort. They relate to the struggle. They admire the grind. They see themselves in your imperfections. And when you let go of the illusion of perfection, you give other people permission to do the same. You become a living example that it's okay to be a work in progress. That what matters isn't how flawless you are, but how fearless you are about showing up again and again. So stop waiting for perfect. It's not coming. And even if it did, it wouldn't teach you anything. Choose effort instead. Choose the path where you learn, where you grow, where you stumble and rise over and over again. Because every time you put in the work, every time you try when it's easier to quit, every time you push when you feel like breaking it, you are becoming. You're becoming the version of yourself that can handle the dream you're chasing. And that version of you, they weren't born from perfection. They were built by effort. One day at a time, one choice at a time, one imperfect, courageous step at a time. The moment you decide is the moment everything changes. It's not the moment circumstances align. It's not when the stars are in the right position. It's not when you finally feel ready. It's when you decide. When you say, no more waiting, no more doubting, no more doubting, no more second guessing. That decision is where the shift happens. Not outside of you, not in your environment, but inside your mind. That's the power of decision. It changes everything without anything else needing to change first. See, most people wait for a sign. They wait for validation. They wait for conditions to be perfect. But life doesn't work like that. The people who make it, who rise, who break barriers, they aren't the ones who waited. They're the ones who decided to act, decided to believe, decided to move forward, even when the path wasn't clear. They took control of their direction, not because it was easy, but because they were done letting fear and circumstances dictate their future. A decision is a line in the sand. Before the decision, you're back and forth. You're analyzing, you're overthinking, you're hesitating. But after the decision, you're in motion. You've locked in. You've made up your mind. And that mental clarity gives you something powerful, momentum. And momentum, that's when things start happening. That's when the opportunities show up. That's when people start taking you seriously. Because nothing moves until you do. Think about it. Everything you've ever done started with a decision. Even the small thing. Deciding to get up early. Deciding to go to the gym. Deciding to study, to show up, to speak up. And what happened after that decision? Progress, action, growth. It didn't require perfection. It didn't require guarantees. It just required you to commit. And that commitment carried weight. It pulls you forward. That's the same energy you need when you're chasing something big. Don't underestimate what one decision can do. It can change your habits. It can shift your identity. It can start a chain reaction that transforms your entire life. One decision to believe in yourself. One decision to stop quitting. One decision to go all in. That's where the breakthrough begins. But you have to stop negotiating with yourself. You have to stop dipping your toe in and decide to dive. Because half decisions don't produce full results. You can't be halfway committed and expect to reach the next level. And yes, it's going to be scary. Yeah, doubt will show up. Yes, people might not understand. But your decision isn't about them. It's about you. About your vision, your future, your freedom. You have to be willing to bet on yourself before anyone else will. You have to be the first believer, the first one in the room who says, I don't care how it looks right now. I made my decision. I'm going to do this. That kind of certainty doesn't come from outside validation. It comes from internal conviction. It comes from trusting that your purpose is bigger than your fear, that your desire to grow is stronger than your need to stay comfortable. And when you make that decision, really make it, it becomes your compass. It guides you when things get tough. It grounds you when things get chaotic. Because when you've truly decided, quitting is no longer an option. People ask, what if I fail? But what if you succeed? What if this one decision opens a door you never saw coming? What if it introduces you to people, to ideas, to opportunities that change everything? You'll never know if you don't commit. And the regret of not trying, of staying stuck, of playing small, that weighs more than any failure ever could. You don't need a perfect plan to decide. You don't need every detail mapped out. You just need to be clear on your why. Because once your why is strong enough, the how will start to show up. You'll figure it out. You'll adapt. You'll learn. But it starts with you making the call. This is what I want. This is where I'm going. This is who I'm becoming. And once you make that call, really make it, the rest becomes about execution, not hesitation. You'll still have challenges. You'll still have days where doubt whispers in your ear. But you'll have something stronger, a decision that you already made, a decision that says, I'm doing this anyway. That mindset separates leaders from followers, action takers from excuse makers. That's how you take your life from average to exceptional. So stop waiting for the right time. It's not coming. The right time is the moment you choose. The second you decide, I'm ready to build. I'm ready to move. I'm ready to grow. Everything shifts from that point on. Not because the world changed. You made the decision. And that's the most powerful move you ever make. Listen to me. I need you to hear this with your heart. Is there any perfect moment? No, there's no perfect moment. The perfect moment is a lie, a distraction, a trap to keep you waiting, wishing, and watching. instead of doing. You're out here hoping the stars will align. But let me tell you something. The stars will never align if you don't get up and move. You're waiting for the right time. The right time is now. The only thing perfect about this moment is that it's here and it's yours. You don't need more time. You need more courage. You don't need a sign. You are the sign. You're the proof that greatness is possible. While you're waiting, someone else is grinding. While you're second guessing, someone else is executing. It ain't about the conditions being perfect. It's about your commitment being unshakable. It's about showing up even when it's hard, even when it's messy, even when it's not ideal. So stop waiting for a purpose. Start becoming persistent. Stop chasing comfort. Start chasing purpose. Start chasing purpose. The real question is it the right time? The real question is, how bad do you want it? Because if you want it like you want to breathe, then guess what? This is a perfect moment. The perfect moment doesn't exist. Action creates momentum. That statement right there is the reality check a lot of people need. Too many of us are out here sitting on dreams, sitting on vision, sitting on purpose, because we're waiting for this magical moment when everything lines up just right. When we have the money, when we have the support, when the weather's good, when the stars align, when we feel ready. But let me tell you something real. You're never going to feel fully ready. That's not how life works. There's always going to be something that feels off, something that's not quite in place. If you're waiting for perfection, you're waiting forever. See, the people who win in life, the people who actually make progress, they're not the ones who had it all figured out from the jump. They're the ones who moved forward, even when it was messy, even when it was uncertain, even when the timing wasn't ideal. They understood that action is the antidote to fear, and movement is the key to momentum. Once you start moving, the path starts revealing itself. Once you step into the arena, the opportunities start coming. Not before. You're not going to get momentum by thinking about it. You don't create change by planning alone. You got to act. The truth is, when you act, even if it's imperfect action, you build confidence. Every step you take tells your mind, I'm serious about this. I'm not just talking, I'm walking. And that energy is contagious. It starts attracting people, resources, and situations that match your new level of commitment. But if you sit there and do nothing, waiting for a green light that will never come, you stay stuck. You stay average. You stay frustrated. So many people believe that clarity comes first, but that's backward. Clarity comes from action. It comes from getting in the game, taking a few hits, learning what works, adjusting, and pressing forward. Some of y'all are trying to plan the entire journey before you take the first step. That's like trying to solve a puzzle without even opening the box. You're never going to know every piece until you start. That's why momentum matters. Once you're in motion, you're learning, growing, adapting, and that motion gives birth to more motion. Think about a train sitting on the tracks. That thing weighs tons, but when it's stationary, even a tiny block in front of the wheels can keep it from moving. But once that train gains momentum, once it's rolling, it can blast through a brick wall. That's your life. That's your goals. When you're standing still, every little obstacle looks like a mountain. But when you get moving, you develop force, you develop power. The obstacles don't disappear, but your ability to break through them increases. Not because they got smaller, but because you got stronger. We've been tricked into thinking we need all the answers before we begin. That's a lie. The only thing you need is a made-up mind and a willingness to act. You don't have to be perfect. You just have to be consistent.